umbrella policy is and things like that. So we want to pick up from where we left off and finish off with your last thought there about the coverages. I know you said you recommended, well, to get an umbrella policy, you need a minimum of 100,000, you were saying.
Right.
But what is an umbrella policy?
So before I get into the umbrella policy, let me finish explaining the different aspects of the auto insurance, okay? So like I was saying, 15, 30, 10 is not going to be enough in a lot of cases to cover people's liability that you may be liable for. You may want to get closer to the average lawsuit that's awarded in the state. Like I said, closer to around 400,000, 500,000 in liability coverage, okay? So same thing for property damage. $10,000, the average car on the road is worth about 30. You're probably going to fall short there if you severely damage somebody's car or total it, obviously. So you want to up those coverages as well. So that's basically the first part of the policy that's mandated by law. I usually recommend to people, if you're on a tight budget, to at least do 25, 50, 25, which is better than the state minimums, obviously, which is the state minimums in every other state but 3, like I mentioned earlier. So the second part of the policy, which I feel is the most important, because a lot of people say, well, I'm not all that concerned about other people as I am about myself, because, naturally people are selfish by human nature.
Self-preservation.
So the second part of the policy is the most important part to me, because it covers you and friends and family that utilize your vehicle. In other words, the uninsured and underinsured motorist coverages are not, required by law. You do have to sign documentation saying that you're removing it from the policy. Otherwise, it would get put back on normally. But it's not, required that you have that. So a lot of people say I have full coverage when they may have, just the bodily injury and property damage and the comp and collision on a policy. So there's really no such thing as full coverage necessarily. Okay. So, because if you don't have uninsured and uninsured, how is that really full, in my opinion? So uninsured and uninsured, the second part of the policy is, and medical coverage also you can add to a policy. But let me explain that. So basically, uninsured is if you get hit, friends or family or somebody utilizing your vehicle, and you get hit by somebody that doesn't have enough insurance coverage to cover you. So God forbid you get hit, you can never walk again, a scenario like this. I mean, if you don't get enough to cover, your future wages or your medical bills, you're going to do just like most Americans do. You're going to get a lawyer and you're going to sue that person. Okay. So in a lot of cases, your medical insurance may or may not pay for, you getting hit by somebody that doesn't have insurance to pay for your medical bills. So that's what that uninsured motorist coverage can be used for. It's used up to the same limits typically. It can be lower, but it's the same coverage as normally that you're covering other people for. So let's say you got 25,000, it would be, you could use up to 25,000 in uninsured motorist coverage on your own policy. Right. And then underinsured motorist coverage is the same thing, but let's say you have insurance, but just not enough to cover your injuries, right? So let's say they give you 15,000 and you got $50,000 worth of injuries. So you could use an additional, $15,000 or $20,000 out of your own policy to, fill in the gap, so to speak. And then you'd wind up suing them or whatever you felt like you needed to do to get the rest of the remaining money. So that's a very important part of the policy. And then also you can add medical coverage, which I'm a veteran, so, I don't have health insurance necessarily. I just go to the VA. So, for example, I have it on my policy.
Hold on a second. So I hear a lot of veterans say they have health insurance. Okay. Or they think they have health insurance.
Okay.
Because they go to the VA.
Well, yeah, that's health insurance to me. Yeah.
It is. So you get treated. Basically they cover everything once you're a vet?
No, they don't cover everything. Like dental, I don't think they cover, I have dental through farmers, for example. But as far as, anything that I need, I could go to, a VA hospital for a regular checkup, usually once a year and different things like that. Some procedures would be covered, different things like that.
But you still need a supplement, pretty much.
Right. Or they could be, if you don't have any other coverage, they could be your primary, provider, so to speak. So a lot of people use medical coverage on their policies to pay out, immediately, or to have some coverage in general. Let's say you got some people have high deductibles of $5,000 or $10,000. that would pay out first, okay, immediately before they go after your personal health insurance for the money. So that could be enough to satisfy your deductible, for example, okay, which could be very helpful. So that's the second part of the policy, basically. The third part of the policy is just stuff that covers your car, so you don't have to pay out of pocket, obviously. Usually if you have a lien holder, they make you carry these coverages because
the comprehensive
and collision coverages, because obviously, you
don't
car's
own the car.
Still theirs.
Yeah.
I mean, while you're paying on it, so they want to make sure their, asset basically is covered. If something was to happen, if it gets total lost or severely wrecked, and you don't have enough, they want to make sure it's covered. And then people continue to carry those coverages for the same reason. They may not want to pay out of pocket if their car gets totaled or stolen or severely damaged because they don't have the money. So you can get these coverages. Basically, these coverages come with deductibles. So a deductible, if people don't know what that is, that's the amount of money that you would pay up to before the insurance company pays any money. So whether it's $500 or $1,000, the insurance company doesn't pay any money until that deductible is met. Okay.
But you can get policies with a zero deductible.
On some policies, yes, you can get.
It's a little bit more expensive.
Right. The lower the deductible, the higher the monthly payments, or the higher the payments in general. And the higher the deductible, the lower the payments, because that's the more risk you take on. So the more risk you take on, the less they make, less expensive they make the policy for you. So, for example, comprehensive coverage is stuff that's not a collision, basically. So comprehensive covers stuff like glass damage, okay? It covers stuff like if you hit a javelina, for example, an animal, okay? If your car got stolen, you got caught in a monsoon flood, different things like that. That's what comprehensive cover covers. And a lot of people get confused because in Arizona, you can get glass waiver coverage added to your policy. Now, if you have comprehensive coverage, you're still covered. Glass waiver just means that if you have a glass only claim, okay, they will waive your comprehensive deductible to replace your glass. But in a lot of instances, if you don't have a crack longer than 6 inches or it's not a really bad crack, they can repair those for free anyway. Okay, so that's just an added feature you can add in Arizona because we got a lot of trucks and rocks flying on the highways around here. So.
We're just starting to get into like the nitty gritty on insurance, auto insurance and the coverages. And
we got playback over here.
Okay. Sorry about that.
It's okay.
So that's comprehensive part of the policy. The collision part of the policy is anything you collide with. So obviously, if you collide with another car, a pothole in the road, a fire hydrant, a garage door, anything you collide with. So you pay up to the deductible and the insurance company pays anything over that. And then there's other frills you can add to a policy like, towing and roadside assistance, lock your keys in your car, you need a tow, things like that. Another important thing that I always recommend to my clients is something like accident forgiveness. If they offer that through your insurance company, I always advise people to take advantage of that. Because what that does is, at least with farmers, it forgives one accident every 3 years.
Oh, really?
So we don't know if we're going to get in an accident. Hopefully you never do. But if you do get in an accident, you don't know if it's going to be your fault or not. Hopefully, people say I'm an excellent driver. It's never their fault, right?
Right.
So if it is your fault and you get in an accident, once it goes over a threshold of money, that triggers the insurance company, and every insurance company has got a different threshold. That triggers them to look at your account to review it for either a non-renewal, a raise in premium, or a drop altogether. Okay, so if you have accident forgiveness on your policy, you won't have to worry about those things happening for that. Okay, and that's always good to have, and it's very inexpensive. Normally, it's usually like maybe $10 every 6 months or something like that. So. Those are some good coverages to have. And that's pretty much car insurance in a nutshell. So I always recommend to people, the bells and whistles to policies, maybe stuff like glass waiver, rental coverage. If you have multiple cars, you may not need those kind of things. I would recommend you have higher liability limits than have some of these, bells and whistles on your policy. Because you see people with 15, 30, 10 state minimums, but they have glass waiver and some of these other bells and whistles on their policies, which, if you have to pay for a windshield, you may have a bad day.
Right.
But, if you don't have enough liability coverage, that could be a bad life. If you get big garnishment, on your policy because you didn't have enough liability coverage.
So let's talk about that real quick. I don't mean to cut you off there, but you hear a lot of people always say, I'm probably overinsured. Can you ever be overinsured?
Not really. In my opinion, like I said, the liability limits, if you have too much liability limits and you get into a situation with somebody, usually people don't sue for $15,000, first of all.
Right.
If you're going to bother to get a lawyer, he's usually going to sue for $1 million, and he may get $500,000, which is about what the average lawsuit is in the state of Arizona. So that's, obviously it didn't become the average at over $400,000 because people were suing for $400,000, obviously. So, in my opinion, you don't want to overinsure yourself. So that's why you sit down with a professional, such as myself, and you go over what your net worth is. Mm-hmm. If your net worth is, I don't know, $50,000, you may not need an umbrella policy. You know what I'm saying? You can look at it for yourself. But like I said, your net worth may be $50,000, but that doesn't mean you couldn't get garnished because they sued you for $1 million.
Right.
You understand what I'm saying? If somebody can't walk again, they're not looking at the fact that, this guy doesn't have much assets, so we're just going to sue him for a minimal amount of money. You know what I mean? Mm-hmm. So those are the things you want to look at. So it couldn't hurt, obviously, to have an umbrella policy or a lot of liability coverage, because what could possibly go wrong? You'd be covered if somebody sues you. I mean, So you just want to fit it into your budget, obviously. So, if you got a tight budget, you don't want to be paying more for like an umbrella policy or some of these other things that you may not need at that time.
Right.
And strangle yourself in that manner.
Right.
But as soon as you could, I would increase coverages. And getting back to what you were saying about umbrella policies. So an umbrella policy starts at $1 million, at least with us it does. And it goes all the way up to $10 million. So let's say I own a bunch of real estate properties and different things like that. Our max coverages for cars through farmers is 500, 500, 500. So that would be 500,000 per person, 500,000 per accident, and 500,000 for property damage. So let's say my net worth is 1.5 million or $2 million because I own properties or I have, investments and different things. So that's not going to be enough for me to feel comfortable. So I'm going to want more coverage. Right. So then that's when you can get what they call an umbrella policy. And you could get that for, like I said, $1 million, $2 million, whatever you feel comfortable with that you feel you need to protect your assets, basically. And umbrella doesn't just cover your car. An umbrella policy that's why they call it an umbrella, because it covers everything basically under an umbrella. So anything you have under the umbrella policy would be included as what they call excess insurance. So I like to call it a lawsuit policy, which means anything over your liability limits that you have would be covered under the umbrella policy. So if you have $500,000 and you get sued for, I don't know, $700,000, you get awarded against you, then obviously your general policy will pay the $500,000, and then you get the rest from your umbrella policy up to $1 million, obviously, or whatever the limit is. So that covers you. And
umbrella policies aren't that expensive, right?
No, typically, depending on, I've seen them range from $300 a year, to as low as like maybe $200, $150 a year. Obviously, the higher your underlying limits are on your house and your cars, usually the lower the umbrella is, so to speak. So in other words, if you had $500,000 for your car and you had $1 million umbrella, now you have $1.5 million in liability coverage.
Got it.
So that gives you a lot more, peace of mind, a lot more protection in that case. So not only does that increase just your car, you can add your house to it. You can add golf carts to it. You could add boats to it. You could add ATVs to it. You could add pretty much anything you want under the umbrella. And not only that, Farmers is one of the only companies in the U.S., one of the few companies in the U.S. where you can not only increase your liability limits, you can also increase your uninsured and underinsured limits. By the same amount. So let's say you want, you have a teenager now, just started driving, and you want to cover, $1 million in uninsured and underinsured coverage as well. So you want to increase that to, 1.5 million or whatever the case may be. For yourself, you could do that through Farmers as well. So that makes us a little different to some of the other companies out there that don't offer the increase in the uninsured and underinsured under an umbrella policy.
So we're going to get ready to wrap up here pretty soon, but where can people reach you at if they want to reach out to you to get a quote? They want to talk to you about their current insurance needs.
Okay, great. Yeah, thanks for asking. So quotes are free. So, obviously Farmers is a major insurance company. Been around since they just celebrated their 90th year. Oh, wow. So, the security is there. You don't have to worry about it being a company,
fly by night.
Fly by night that may not be around tomorrow, that may not pay claims, things like that. I can be reached on my website at farmersagent.com/gbryant. So that's GBRYANT. Or you can reach me via phone, obviously, at 520-836-9002. So that's 520-836-9002. And you can also reach me via email if you like at gbryant@farmersagent.com. So that's Bryant, plural with an S, at farmersagent.com. So
nice. Okay, great. And then just one misconception about the insurance industry.
I think a good misconception would be the way that insurance companies look at insurance is different than the way people look at insurance. Because, even myself, before I became an agent, I had minimal coverages. So I'm guilty of it myself until I really understood what that meant and what was at risk.
Right.
Because every state is different. But I think the biggest misconception is that people feel like it's a maintenance policy. And we do offer, home warranties for appliances and different things like that. But like if you have a homeowner's policy or you got a car policy, it's for catastrophes for the most part. Right. Okay. That's the way the insurance companies look at it.
It's indemnity. It's an indemnity.
Right. It's for big stuff. Right. I mean, a lot of people will file little claims or they'll have real low deductibles in a lot of cases, and they'll file a bunch of little claims, and then, for the better or worse, sometimes they get dropped or they get non-renewed.
Right.
And these things happen, and they feel like, oh, well, I'm paying my premium. These people have to insure me. That's not the case. Okay. They can choose to insure you or not, based on, unfortunately, how many claims you may have filed.
Right.
So if you have really low deductibles and you're filing a lot of claims, it's really not a maintenance policy. So, they can review it and decide, hey, listen, well, when this guy's renewal comes up or girl's renewal, we're going to non-renew this person.
Right. We're paying out more than they're paying in.
Right. Or, or they see it as a bigger risk or whatever the case may be. And people don't realize those things stay on your record for 3 years. So if you don't have accident forgiveness and you get in an accident, a lot of people say, hey, well, I'll just go somewhere else. Okay. Well, that's still going to be a pro rate on your policy that stays on your record for 3 years. So, you're still going to be shopping around with that same incident or accident on your record.
Right.
Okay. So, you want to be aware of that and, not really use it. I would say, take on as high deductible as you could feel comfortable paying.
Right. I think the average is like 500.
Yeah, the average is 500, 1,000, somewhere in there. Right. Yeah. So, I just wouldn't, get into the mentality of, I'm just going to file claims, just to be filing claims. You kind of, if you have it, you could put it on a credit card or something to save yourself from getting non-renewed. Nobody wants to be in a position where you have to get state, every state has insurance that the state mandates.
If you can't get coverage somewhere
that you can't get coverage anywhere else.
Yeah.
They have to insure you, but guess what? That's usually really high rates because you can't go anywhere else. So you don't want to put yourself in that position by filing a lot of claims or, not having accident forgiveness or something like that on your policy.
Cool. So I think that's it. I think that's all I got for you. You have an event coming up February 10th.
Yes.
You're going to be at Candyman's Grill on 31st Ave in Thomas.
Okay.
And you're going to be there talking about...
I'll be there talking about, since there'll be business owners there, I'll be there talking about some different aspects of business insurance, why it's important to have business insurance, whether you're, just, a home-based business or you have a storefront, why it's important to have workman's compensation, even, maybe it's just you.
Or disability?
Or disability insurance, correct, Maybe it's just you, but you could still file a claim as a one person on workman's
as an employee, as an employee of your business.
As an employee of your own business.
That's right.
Things like that. So, workman's compensation, you can check the laws on that kind of stuff because a lot of people are unaware that there's different types of 1099 out there. So you have, barbershops or hair salons, and they have 1099s that work for them, but they might want to check the IRS website because there's different types of 1099s. There's 1099 employees, and there's different forms of 1099s. I don't work the IRS, so I'm not going to get into that.
Right.
But you can go to the IRS website.
You're going to point them in a direction.
Right, yeah. You can go to the IRS website and look it up for yourself.
Right.
So you don't want to get yourself into a situation where you do have employees, especially more than one, and you don't have workman's comp, or you don't have, errors and omissions insurance, or, insurance in general, to cover yourself, because that's what it's for. For them to pay, not you.
For them to pay, not us.
Exactly.
Okay, that's what
they
insurance
usually
is
have
for.
more money than the average person.
That's
so,
right. That's right.
It's probably better that they pay.
Well, Graston, I definitely appreciate you coming on to my show. I debuted today, so thanks for being my second guest on Mind Your Business. We're looking forward to growing with you through Connect the Dots.
All right.
We have an event coming up January 26th.
Thanks for having me.
You're going to be there, right?
I'll be there. Correct, yes. I'll be there with
if you guys
on,
need some,
right?
not with bells, like whistles too,
whistles,
cow clacks.
Correct, yeah. All that.
So if you guys want to meet Graston, be sure to come out to Connect the Dots January 26th. He's going to be there with his team. Obviously, he's going to be taking, if you need some questions answered, or, you want to get more information about insurance and looking at your current policy, he'll be there so you can build that relationship with him and touch bases. But thank you guys for tuning in to Mind Your Business on Support District Radio. I'm your host, Shasta Broaddus. Like I said, I had Graston Bryant with Farmers Insurance. So if you guys have any questions, feel free to reach out to him or me, and we'd be happy to shop your insurance needs. Thanks again for tuning in. I hope to see you guys soon.
Bye.
Goodbye.